Hi, I'm Adrian from NextGen Taxes, and today I'm here to help you navigate the maze of estimating your state, federal, and marginal taxes. Taxes don't have to be intimidating when you break them down step by step. And of course, I'll share some common mistakes to avoid so you can steer clear of pitfalls. Let's get started. Step 1. Understand your taxable income. Your taxable income is your total income minus deductions. Think of it as your adjusted income that Uncle Sam cares about. Here's how it works. Start with your gross income, salary, freelance gigs, investment income, etc. Subtract deductions like the standard deduction or itemized deductions. Example, if you're single and earn $70,000 in 2023, subtract the standard deduction of $13,850. Your taxable income is $70,000 minus $13,850, which equals $56,150. Step 2. Federal tax calculation. The US has a progressive tax system. Higher income is taxed at higher rates. For 2023, here's how the federal brackets look: 10% on the first $11,000. 12% on income between $11,001 and $44,725. 22% on income between $44,726 and $95,375. Example, if your taxable income is $56,150. The first $11,000 is taxed at 10%, which is $1,100. The next $33,725 is taxed at 12%, which is $4,047. The remaining $11,425 is taxed at 22%, which is $2,513.50. Added up, $1,100 plus $4,047 plus $2,513.50 equals $7,660.50 in federal taxes. Step 3. State tax calculation. State taxes vary widely. Some states, like Texas and Florida, don't have income tax. Others, like California, have progressive tax rates similar to the federal system. Example for California, with $56,150 in taxable income. 1% on the first $10,099 equals $100.99. 2% on the next $13,843 equals $276.86. 4% on the remaining $32,208 equals $1,288.32. Total state tax equals $100.99 plus $276.86 plus $1,288.32 equals $1,666.17. Step 4. Marginal versus effective tax rates. Here's where people often get confused. Marginal tax rate is the highest rate applied to your income. If your taxable income is $56,150, your marginal federal rate is 22%. Effective tax rate is your overall tax burden. For $7,660.50 in taxes on $70,000 of gross income, your effective federal rate is 10.94%. Why it matters. Understanding your marginal rate helps you plan for bonuses or additional income, which will be taxed at that higher rate. Step 5. Don't forget tax credits. Tax credits reduce your tax bill dollar for dollar, unlike deductions, which reduce your taxable income. Some common ones include child tax credit of $2,000 per qualifying child, earned income tax credit designed for low to moderate income earners. Example, if you have $7,660.50 in federal taxes, but qualify for a $2,000 child tax credit, your new tax bill is $5,660.50. Step 6. Plan for quarterly payments, self-employed. If you're self-employed or don't have taxes withheld, you're responsible for paying quarterly estimated taxes. Here's how to calculate. Estimate your annual income and tax liability. Divide your total taxes, federal plus state, by 4. Example, federal tax, $7,660.50. State tax, $1,666.17. Total, $9,326.67 divided by 4 equals $2,331.67 per quarter. Common mistakes and pitfalls. Now that you know the basics, let's talk about what not to do. Forgetting to factor in all income sources. Many people forget about freelance work, rental income, or investment earnings. Track all income streams to avoid underreporting and potential penalties. Confusing marginal and effective tax rates. Believing your entire income is taxed at your marginal rate. Remember, only the portion of income in a higher bracket is taxed at that rate. Overlooking state taxes. Moving to a state with income tax and not adjusting your estimates. Check your state's tax brackets annually. Missing out on deductions and credits. Ignoring available tax credits like the child tax credit or education credits. Research or consult a tax professional to claim all eligible credits. Underpaying quarterly taxes. Failing to pay enough estimated taxes can lead to penalties. Use tools like NextGen's tax calculator to ensure accuracy. Not planning for tax law changes. Tax brackets and deductions change annually. Stay informed about the latest tax laws or work with a professional. Pro tips for smooth tax calculation. Leverage tools like NextGen's calculator to automate complex calculations. Review last year's return. It's a goldmine of information for estimating this year's taxes. Save for taxes throughout the year. Avoid the shock of a large tax bill by setting aside a percentage of your income monthly. How NextGen Taxes can help. At NextGen Taxes, we take the guesswork out of taxes. Whether you're estimating quarterly payments, optimizing deductions, or planning for year-end, we've got you covered. Here's how we can help. Personalized tax strategies for individuals and businesses. Tools to calculate federal, state, and marginal taxes quickly. Expert advice to minimize your tax burden and maximize savings. Take control of your taxes today. Stop stressing over taxes. Visit nextgentaxes.com or give us a call and let us handle the hard part. Thanks for tuning in. I'm Adrian, reminding you that taxes don't have to be taxing when you've got the right team on your side. Let's tackle them together.